Interview coming up with Aditya Puri from HDFC Bank, him indicating that interest rates are only going to head southwards from here.
Of course, after the CRR cut by RBI, most banks we're seeing are looking at cutting the base rate. So anything on that front as far as HDFC Bank is concerned? Could we expect a base rate cut, or would you look at cutting rates in certain segments?
Let's look. That's a decision for ALCO, but I would say your reasoning is correct. Not only the CRR cut, you're also seeing that the banks are reducing the deposit rate. When they reduce the deposit rate and there's the CRR cut, the cost goes down. The base rate calculation is such that if your cost goes down, you can at most lag it a quarter, but then you have to reduce your rates. So if your question is, are interest rates going down? Yes.
But will you be looking at cutting in certain segments?
Definitely. We are part of the market. I can't be out of the market.
Okay. But anything on the base rate front as of now?
We will be looking, ALCO will look at, you don't want me to supersede ALCO, do you?
Yeah.
But suffice it to say that, yes, interest rates are headed downwards.
And like you mentioned, that interest rates are headed downwards, and of course, most bankers are expecting corporate sentiment to pick up. So how would that pan out as far as asset quality concerns are concerned? Do you think that it would lead to improvement in asset quality?
See, you look at it this way. If you go back 2 weeks, everybody was talking about policy paralysis and an issue, and I think they've gone into supercharge mode. So when you look at it now, the problems that have been discussed for a long time are now finding solutions. So we are making a beginning. We will not see an overnight change, but has the sentiment changed? Not only locally, globally it has changed. That is why you see your stock market doing well, your dollar rupee doing well, and on to top of that, oil is going down. So I think if we carry on with the stated intent, we should be stars again.
And of course, you've been asking for reforms by the government time and again, and we are now seeing a lot of reforms happening. So are you seeing the government is taking the steps in the right direction? And would you expect certain reforms, especially as far as financial sector or banking sector is concerned?
I wouldn't want to comment on the government, but I would have to say that I'm very happy. Don't I look happy? I may not have looked so happy a while back. So I wish they continue. I think they're taking a very bold decision. I think they're taking that decision in the face of substantial opposition. My own view, it's very good for the country, and I do provide more strength. So if they want my shoulder behind it, I'd love to put it.
So of course, about your credit demand as far as that's concerned, which sectors are you seeing the demand would come from, and what are your credit as well as your deposit growth targets?
We can't guide. You know, I'm listed on the New York Stock Exchange, but we always, our consumer demand remained throughout the stage because, wage rates were going up. You did not face unemployment, and that's a major demand. So the consumption demand had continued. We had varied targets on the GDP, somewhere between 5.5 and 6. We do believe if the reforms continue, we should be 6+. We are seeing good working capital demand, which comes with inflation. Unfortunately, we haven't been seeing investment demand. And I do hope if these reforms continue and they get more clarity, which like the power solution, if that works itself through, I think if the investment demand comes in, we should be growing at 6+. And you haven't asked me, are you going to ask me later about the problems of the bad debts, or you're not going to ask me?
No, I'm not going to ask you. I just wanted to, last question, as far as your margins are concerned, if you can give a guidance on that, are you seeing any pressure on that front?
We're seeing some pressure, but it remains within the range. We've always said our margin is between 4 and 4.2, and it remains in that range.
Thank you so much, sir. Thank you.
Okay, that is Aditya Puri in exclusive conversation with ET Now. Simran Gill confirming that their margins will be around 4% levels going forward as well, and the fact that they are hoping for a rate cut by the RBI as well come the October policy.